Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. Before we begin our video, you want to start off with our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. Any strategies we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. So this is our stock market technical analysis trading plan. In our video, we'll look at the past week's economic calendar and also look forward to next week. We'll see what happened as far as the most recent price action to identify key support and resistance price levels. We're going to look at the charts of the market leaders, Apple, Google, Goldman-Sachs, Priceline. We'll take a look at those. We'll look at the dollar, gold, and crude oil charts to see if there's any leading sentiment. And finally, we'll have an education spotlight at the end. As we begin to look at the week that was, we see that all three major indexes, the Dow Jones, the NASDAQ, and the S&P 500, all rose for the week. And we can see that the Dow Jones is up 5% for the year, and the NASDAQ and S&P are down just fractionally 0.2% for the year. So maybe December we'll see all three major indexes in positive for the year. And any of you who are out there who believe in the dogs of the Dow investing strategy, where you take the underperformers, the low performers of the Dow, and invest in those, you probably did well for this year because the Dow appears to be the strongest. Now keep in mind the Dow is just 30 stocks compared to the 500 for the S&P 500 and the mini stocks, tech stocks that are in the NASDAQ. Now when we specifically look at and zoom in at this week, we can see that one reason the market was up this week is that the banks, the financials rose 2.3%, and a lot of that had to do with what's going on with Europe in the bailout progress. Now, if you remember last week, the S&P downgraded a lot of banks, and so as the euro is trying to stabilize itself, we're seeing some of the financials garner strength this week. So the Eurozone held a summit, and a lot of positive commentary came out on Friday in an attempt to stabilize the euro. We also had sharp declines for inflation data for China. All of this overseas news basically drove the market this week because we didn't have any corporate news. And the only positive economic news on this side was the University of Michigan sentiment rose to a 6-month high at 67.7. Going into next week, we can see we do have a couple earnings here. We do have FedEx and RIM. They're usually the last big companies to report in each quarter, so we might see something there. I doubt that either one will really move the market, and really RIM really has lost a lot of its relevance. As far as economic data, we see on Tuesday we have the FOMC announcement, so that certainly can be a market mover. We also have Philly Fed on Thursday, but really the FOMC announcement on Tuesday and the press conference associated with that certainly could move the market on Tuesday, and they may have some commentary about the what's going on in the Eurozone. Let's pull up the charts and take a look. We are looking at the S&P 500 on a daily chart, and we basically can see, let me scroll up a little bit here, there we go, that our 200 moving average is acting as resistance on our daily chart. Good news is that we saw, and this is where we were talking about 2 weeks ago, we talked about this 1150, and we said that in the past we had these wicks here, so that we needed to find support here. Otherwise, we're going back down to our lows. Well, we did find support. Now, you can see that we really could draw in a 1220 line here if we wanted to. I'm not, because we have this swing low here. So I don't want to draw this and say 1220 is support, 1215 is support. Although, we can see support here, resistance here, resistance here. There is an argument for this 1215, 1220 price level, which will be our 50 moving average. There is an argument here for us to draw a line in here to find support. But really what we have to figure out, what's going to be our catalyst to get us above this 200 moving average to at least get us back up here to 1300. But again, what's going to get us above this 200 moving average? Because clearly over the last 2 months, it's been our resistance point. Our indicators are pretty much coming up to overbought here. You can see stochastics are already there. RSI Wilder is not there, but it's heading up there. And MACD is getting a little bit strong also. So our indicators are starting to get a little overbought. Probably would be overbought if it wasn't for Thursday's price action. Now we'll zoom out a little bit. Check out the S&P 500 on a weekly. And let's zoom in. Here we go. And so here we can see the last week of November wiped out a lot of this down move in November to make the month of November really a doji. And we can see that our first month here in December is a positive candle. So there's certainly rationale for us to get up here and test again 1300, our last swing high here. But you'll notice as we come back here, right around 1270 is this swing low here. So and that is the wick high here for this week. So we need to get above the 200 moving average. We need to get above the high of this week if we're really going to again test the market. Now on a weekly, we're really kind of hanging out in the middle of no man's land. There is more room to the upside if we are going to head higher. Now we'll come all the way back out here to our monthly. We'll see, as we discussed, there's our doji for November, and there's our little up move here for December. Now, originally, and we can see with these 4, or I guess 5 down months here, we came out of overbought and we're pulling back a little bit. Now our indicators are in the middle. We really could go either way according to our monthly chart. So overall, our shorter time frames, weekly and daily, heading up, a little bullishness, but we're getting a little bit overbought, while our monthly charts are still coming out of overbought and now are in the middle of no man's land. We'll switch over and check out the NASDAQ. Come on back to the daily and zoom on in, and we'll see we can begin to see this larger range here. I'm just trying to zoom in, and we can see, here's our August lows down at 2300, and when we broke the 200 moving average, it's up here around 2750. And for the market stayed in between our 2300 and our 2600 range here from August all the way up till October, and then we entered a new range here of 2600 up to about 2750. As we ended November, we began to see a pullback, and we pulled all the way back to 2450, and that matched up with our lines in here. So now, as we look at it again, we're seeing that although a little bit stronger, because we did break the 200 here, we did break the 200 here, but we can see where we are right now is sitting at the 200 moving average. So similarity of what's going to be our catalyst to get us above that 200 moving average. But we can see that we sort of, because we've got these 3 basically, you could almost call this a morning star, where we gapped up and now we're pulling back. If we break the low of Friday, you would have to think we're coming back down to these moving average. And you can see stochastics and RSI here are already rolling over a little bit. And again, that's probably because of the way these candles are forming. A little bit different than the S&P 500. If you remember, the S&P 500 had a very big red candle for Thursday, but pretty much brought it back up here on Friday. We don't see that on the NASDAQ. So our NASDAQ is showing a little more weakness than the S&P 500. We'll go out to the weekly, and we'll zoom in a little bit more, and we'll see, again, there's our November, last week saved November, and then sort of a hammer here as we start off December. And our indicators for the weekly are handing out here at no man's land, not really give us any direction. We'll go all the way out to monthly, zoom on in, And there's our doji for November. And so some more sideways action here so far here for December. And again, just like the S&P 500, they're coming out of overbought to this area, implying more room to the downside. So we have a little divergence, or shorter time frames. But wait a minute. We said with the Nasdaq that the shorter time frame is showing a little weakness here on the Nasdaq, which would agree with the larger time frame. So we got the S&P 500 a little bit stronger than the Nasdaq, and of course the Dow is the strongest of them all. To try to give us a little bit more better picture, we're going to look at some of the market leaders to get an idea of what they're showing us their market may do here in December. But always, again, our phrase is always going to be, what's the catalyst? What's going to get us through the 200 moving average on the daily chart for both the S&P 500 and the Nasdaq? Okay, so we are starting off here with Apple as we look at our market leaders. And what we can see here recently is just a bunch of sideways action. We went down, we tested the October lows, we tested the 200 moving average. We've made a nice move pullback, but you can see this range that we were in here for the end of October and November before we fell out. It's now acting as resistance as it's trying to get back in this, trying to get back up to 400. It's just kind of, again, 1, 2, 3, 4, 5, 6 kind of doji days. With the last day, being a doji right here on that support resistance price level. So, we need to get above these wicks to really test 400 once again. But if I were to look at Apple, I would say sideways to up. Amazon, and let's zoom on in here. Looking at the daily chart of Amazon, and just, even though I haven't zoomed in enough here, you can see this sideways price action here. We'll zoom in a little bit more, and starting to fill in a little bit. We'll zoom in a little bit more, and we can really see just a bunch of sideways price action. Failure at the 200 moving average, like the rest of the market, and now we're going sideways. So we've got to watch this November price low here to see if it's going to make a new low. But overall, just sideways. I'm going to have to go sideways, maybe even sideways to down, because clearly we've made lower lows. We'll go to our trend line, come up here, whoops, and we'll start to see what we have going on here. That didn't work. Let's try that one more time. There we go. So clearly we've made lower highs here. And with the failure at the 200 moving average, if you're a day value follower, that's could be an ice hole failure here at the 200 moving average, making a new low. So, for Amazon, I probably have to say sideways to down. So we've got Apple sideways up, and then Amazon sideways to down. But a lot of consolidation right there. What about Google? Very nice over here on our point of control, our market profile. Let's zoom on in here. One more time. And we can start to see Google came down, tested 200 moving average, has made a nice recovery here. We'll zoom in a little bit more, and we can really see what's going on here. So we need to get above 631 here to start making a new swing high. But definitely with Google, we could say sideways to up, and we can see on our market profile that 621 is the point of control that could hold up as volume support here. But Google sideways up. Goldman-Sachs. We said financials had a good week earlier in our video. We'll zoom on in. We can see the clear downtrend. Zoom on in again, and we can see, well, at least we're finally above the moving average once again. We did that once before here in October. We're back above that. I mean, it's hard to say up when we have clearly, such a huge downtrend. So it's hard for you to really say up. But there is some strength here in Goldman Sachs. So I would like to see it get above 108 to really, start to think that it's going to make a run up to that 200 moving average. But I'll say sideways. MasterCard, one of the best charts around right now. Look at that. Again, look at that. Zoom on in. Still looks good, although we can start to see a little congestion. Zoom on in, and it's still looking good. So MasterCard, we would probably say sideways to up. So we got Google sideways up. We've got MasterCard sideways to up. We've got Apple sideways up, and we have Amazon sideways. Goldman-sachs sideways. Netflix, the chart that was, I remember July, over $300. Zooming on in, and we're basically in the range. So right now it's sideways. We'll see what happens here as it gets to the 20 moving average, where as it hit the 20 moving average, of course that's earnings, but it came close to 20 moving average here as it fell off. So we'll see what happens here at 70, 75. But for right now, Netflix, sideways. And finally, Priceline. I mean, there it is. Priceline's in a huge range, hanging out in the middle of nowhere right now. Huge range. Didn't quite actually make it all the way down here on the last attempt. And now it's just going sideways. So Pricelines, I would say sideways. You can really see that on the market profile. 480 is your point of control. So for the most part, we got sideways up, and we have several sideways. So our market leaders are showing that there may be some strength here. Maybe the Santa Claus rally will continue here in December. But again, the FOMC meeting on Tuesday can certainly give us some indications. So why don't we go ahead to our market sentiment leaders and look at the dollar and gold and crude oil. So here we are looking at the dollar chart, and we can see the consolidation that it has basically been in for the month of December. 79 acting as resistance, which we have been watching. We do technically have a lower high here. Of course, if we want the market to rally, we need the dollar to be weak because of that inverse relationship. But the dollar right now is showing sideways action. And so we'll probably see that also in gold. And you can see, although gold certainly is in a great uptrend, but as we zoom in, we can see gold is starting to bounce between 1660 and 1800. We'll go in a little bit more so we can see it better. And so gold is definitely in a range here. And so as the dollar begins to consolidate, we're seeing the same thing here in gold. Definitely need to see it break below 1700, 1760-ish to start seeing if it's going to test the bigger channel support and resistance price levels. And then, although MasterCard is a great chart, so is crude oil, if you like it. But remember, as we talked about this range, 96 to 102 here. We talked about this range that the market was in. We fell out, and now we'll zoom in. And on this great rally that the market had, it's rallied where? Right back up to 102. Where did it find support? Right here at 96, 200 moving average, back up, 102. So we're starting to see this begin to consolidate again, which might keep our gas price levels here at this price level also. So consolidation on crude oil also. As we move to our education spotlight, we really finished our conversation about trading plans, trading systems, trading rules. And now we're talking about trading routines. Yes, another trading metaphor. But specifically, it's about your schedule. Because the thing is, when you're available to trade, heavily influences what type of investment vehicle you should be choosing to be a trader. Remember, everything we say is about identifying who you are as a trader. And once you know who you are as a trader, which involves your schedule, and when you can trade and watch the market and monitor your portfolio, can should affect the type of trades that you be taking. When I first started trading options, we called it end of day trading. Where you get home from work and you would check the market and you put in these contingent orders that if the market did this, do this and that. Because I was a school teacher. So if you don't have the time to be in front of your monitor, then you may not want to be an aggressive day trader. So your schedule and more importantly, time with family, all these things have to come into consideration as to determining what is the best vehicle for you to invest in the market. As you know, you can find us on Facebook, YouTube, and Twitter. Please like, comment, subscribe to make sure that you get all of our new videos. 2012, we are definitely going to be back to uploading daily as frequently as possible. So you definitely want to subscribe to our channel. Let us know. Give us feedback about what you want to see. We're going to be bringing more tutorial videos. We've got so many on our other channel, Ascendo Traders, but we're going to be coming up with a lot more, especially about personal finance also, not just investing in the stock market. So definitely subscribe to our channel. As far as our resources, we are putting together some great things also for you in 2012, but you know we've got our great free 5-part video course on high probability trading. What things should you be including in your trading rules, in your trading system, to make sure that you're investing in high probability trades. We hope that gives you an insight to who we are as coaches and how we can help you develop that trader's mindset to be a successful trader. You can get on Google and find all these investing courses for $2,000, $3,000, $4,000. We're selling ours for $99. It's got the same information because we believe that's the problem. People, and I did it. I paid 2 different organizations $3,000 for their systems. But the problem was I spent no money at that time on my psychology of trading. And so we want to give you the information that you need at an affordable price so that we can help you with our coaching to really transform your mind and transform your trading. It's not the system, it's the mind. If you're looking for a futures broker, why not try our broker at low as $300 intraday margins, 20 free trades you sign up through us. And then charter package, it works on both PCs and Macs. And again, depending on the type of trader that you're going to be, this can help you find the latest and moving stocks based upon your screening criteria. And as we just focused on, it's not about the Sentinel indicator, and we can get that to you for an affordable price. What it is about is your ability to think and be unique, your ability to develop a trader's mindset so that you can enact your trading system day to day to day. Thanks, guys, and I'll see you next time.